Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, November the 5th, the year 2019. Let's talk trading. First Principles Trading Part 2. Yesterday, I mentioned, or I segued into the normal risk and money management screen, something you've seen before if you've been watching my videos. And see, one of the first principles is that if you lose 50% of your account, you're going to have to double it, the remaining, to get back to where you were. And if you think about it the other way, if you were to double your account and then lose half, you're right back to where you started. So this is why it is so important that you don't lose any more than you're willing to lose on any one single trade. That just cannot be stressed enough. That has to sink in, because it's true. You can't reduce it any further than that. It's like what I showed you yesterday when we looked at this chart here. These lines are set in stone. They're not going to change. Those values, the previous month's high and low and the current month's open, they are not going to change. And as stated before, price is either going to exit one end of the previous candle at the top or at the bottom here at the previous high or low, or it's going to exit both, in which case you'll get an outside bar like we had right here, outside bar, or it's not going to exit, you're going to get an inside bar like what we had right here. These are first principles of trading. Now, I think we also talked about control in trading. You see, trading's uncertain. We're dealing with uncertainty, but there's some things we can control. We can control, for the most part, how much we lose per trade, but we can't control how much we win. And so there was somebody that was saying, well, if you get this long wick here and this and you only make a couple of pips on these other trades, and then you have this huge loss, it's going, wipes out 3 wins. No, because if this is your long trigger and this is your stop, then you need to adjust your position size so your risk doesn't exceed the maximum amount you're willing to lose per trade. And it doesn't matter whether it's one of the systems or methods that I've shown you or somebody else's. And that's something that most traders fail to understand, that they have to disconnect the risk from the method. Okay? Risk is part of your money management. Your risk has nothing to do with the method. If the method says you go long here and you put your stop here, okay, then you just determine what position size you need to trade at, so if you get stopped out, you don't lose more than what you're willing to risk on that trade. I know I might be repeating myself, but I'm trying to say it in as many different ways so it clicks, because I don't think everybody gets this. And this is so crucial, so fundamental. That's why I'm going over it again today, maybe in more depth than ever. But if you don't get this, you're going to wind up crashing and burning. It's just that simple. Okay, so that first principle you have to keep in mind. So let's look at the rest of the charts here. And somebody said that I go through these charts really quickly sometimes. Well, I've done videos and series of videos on like the wick zone, the rat zone, the buy zone, etc., telling you everything from how I created it, the frequency distributions, how to trade it. So if you need more in depth, just watch those videos. But I make 15-minute videos because I don't want to take up too much of your time. You don't want to listen to me for an hour. You got things to do like trade. So, that being said, yeah, sometimes I just fly through a particular chart. Sometimes I'll stop and pause. So, for example, here, we still have a couple of gaps that haven't filled. If you notice, all those New Zealand pairs filled. I hope somebody took advantage of them. Simple trades. We do this every week. As far as the dollar yen, you can see for the week we're up 89 pips. A nice move to the upside here. And we're only 56 pips away from the yearly open. 107 pips up for the month. Now, look at what happened here. This was yesterday, Monday's candle. We opened right here and we shot through it. So once again, looking at the breakout of the Monday candle here, using that as the weekly period opening range. Here's the monthly opening range. You can see we're back into the yearly. First day of the trading day of the year, opening range. We're right there. And you can see here, we're moving above a lot of the opens here. So you can see the opens that we still have to cross. And as far as the ranges, you can see once again, we're above some ranges and still below others. And there they all are. The last 12 months. In fact, I need to update this. It's now November. Inside bar, okay. Here's that D1 inside bar, happened 14 days ago. Shot right through it. The weekly inside bar 2 weeks ago, shot through that one. And so here we have these inside bar trades, once again showing to be profitable, simple horizontal line trades. Range 1, 2, 3, 4, 5. Above 100. And looks like we're going to put in a new monthly H1 highest open here in about a half an hour or so. Buy zone, we missed the pivot again. So this pivot was outside the open. So technically, we shouldn't have taken that trade if you use the pivot point as a bias. But this is interesting. We're above the weekly open, so that's a long bias. The pivot's below the daily open and below the weekly open, so that's a short bias. So depending on what you use for a bias, you may or may not have taken that trade. And I can't say which is stronger. As you can see here, we're making new highs, the rat zone. So red rats, get ready. We went through the weekly R1. There's a missed pivot here. And there's a missed pivot right here. So now we've got a couple of more missed pivots for the month of July. But notice we took out this missed pivot here. Price action. I have to laugh. Price just doesn't like to stay between these two lines. It just doesn't. And you can see here that long. And there's another long. It just doesn't like staying between the two lines. Wick zone. Somebody was asking me about what does this mean? How do you use it? It's basically just telling you where price is in relation to the previous high, the open, and the previous low. And this is for the daily, okay? And we've got range, 62.2, and the percent is 92, okay? And so where is price within the range? It's at the 92% mark. Now it's at 93, steadily moving up. It's just to let you know where price is. You can think of this as the current fib number, because that's what it is in relation to today, not the previous day. Horizontal line crosses, there was a couple right there. As you can see here on the tick level, we're just meandering. Einstein line, no trigger yet. And the wick zones, you can see how they're overlapping the daily, weekly, and monthly wick zones here, and prices in those zones. ATR, you can see we hit the weekly open plus the ATR 4. Okay, so this was a place you could think about for price to pull back from, and it is. On the daily, you can see here we're in the ATR zone. So once again, this is an area to look for a reversal. For the week, 97 pip range. For the day, 62. Once again, showing that opening range here. First day. So fellow traders, the first principles. We'll cover some more coming up soon. I may or may not be able to put out a video tomorrow, just to give you a heads up. I've got some more traveling to do. I have to leave out early, so maybe I'll get up extra early and maybe put out a quick video for you. But, when you look at these charts with all these horizontal lines, it really tells a story. I mean, these lines are drawn before price gets to them. Okay, and it's just amazing, the action around these ATR, the halfway point open plus half the ATR min and max here, and the same for the weekly open with these ATR ranges. Because notice something here, it hit this 50%, and then what happened? It actually pulled back. Now it's continued. So once again, these lines are areas of interest where you can say you can take profit, you can look for reversals. But remember, boys and girls, these videos are for educational purposes only, and your results may differ from mine, and trading's really risky. So if you need advice, seek it from an accredited financial professional. That way, when they lose your money, you lose your money, you took advice from an accredited financial professional rather than some person you heard on a YouTube video or somewhere else on the internet. And remember, fellow traders, when you're trading, it's not what you trade, it's how you trade it. So go out there, drain the banks. Hey, and if you're new to the videos, hit subscribe, hit like,